coverage from an industry perspective. My clients are banks, private equity firms, insurance, and compliance and technology and analytics professionals. Team, I think we can move to slide number 5. Some of the mega trends that we're seeing in the network are related to the regulators building the risk-based supervision, as I mentioned. There's the convergence between different financial crimes, something that we refer to as financial crime convergence. So bringing in money laundering and sanctions with fraud and anti-bribery and corruption. There's a lot of attention on the so-called artificial intelligence, and I have my views about that. And regulators taking a leap of faith in terms of encouraging some of the new technologies to be used by banks and financial institutions in building their financial crime compliance resilience. And there's an increased attention, and I heard the previous presentation on non-banking financial institutions as well as other industries and reporting entities. So there's a broader attention in the world on these sectors also. The agenda or the classical interested party in a bank has changed just recently. So we're seeing a lot of attention from the operational side because compliance became a burden, obviously from a cost perspective. So a lot of the projects that we currently have are related to achieving increased risk coverage, but also increased attention on decreasing the costs. So some of my points from today will be related to that. And then I'm sure some of you, if not most of you, have felt the pain of quasi regulators like global banks that are acting in their correspondent relationships and imposing new standards and increased scrutiny on smaller banks. And there's a shift in the attention that the board members are paying to financial crime compliance. So some of my clients have CEOs that spend as much as 60-70% on financial crime compliance, which is something that is unseen or unheard. So all in all, this is the momentum, as we mentioned at the beginning of the presentation. Team, I think we can move to slide number 6. There's a couple of numbers that you need to take from this particular slide. One is that 1 in 2 institutions have, or 1 in 2 instances of suspicious transactions reports or suspicious activity reports, as we call them in different parts of the world, have been detected by technology. So I guess there is an increased opportunity there to bring more optimal technologies to the overall financial crime compliance operating models, because it is rather unusual to have most of your suspicious activity reports coming from your operational unit. So it is a rather concerning fact. And another one is related to the fact that 1 in 3 respondents to some of our studies have reported that they have issues with data quality. In some cases, is as much as data related to transaction monitoring, related to sanction screening, which brings additional risks to the overall financial crime component. So this is rather discouraging. So some people may look at it as an opportunity, but it definitely should be on the top of the agenda of financial institutions. I think we can move to the next slide, number 7. So when it comes to transaction monitoring, obviously the having a robust program requires considerable resources, and as I mentioned earlier, there is an increased pressure on cutting costs. So how do you and how do you achieve the right balance is one of the challenges of the financial institutions. There's cost implementation to related to new technologies. So some of the situations and some of the cases that we've seen, there was other inappropriate steps that the technologies should be replaced. I guess there's room for augmentation, bringing more machine learning and other new technologies in order to augment the existing technologies and work with vendors to make sure that you have the most recent and updated sort of technologies as part of your overall technology blueprint. There's limited flexibility and complexity, so it's a rather complex exercise to maintain threshold related to multiple segments when you have a risk-based segmentation in place. So that is an additional challenge. And of course, you have black box solutions that you cannot really split or go into the back end of the solution to see exactly how it works, because that is property. So the challenge of financial institutions is to optimize so they cannot necessarily can go back into the transaction monitoring system as intellectual property belongs to the vendor. Team, I think we can move to slide number 8. So when it comes to transaction monitoring, optimization lifecycle, I think someone can summarize it as a risk assessment, kind of running and understanding the typologies that the institution is exposed to, and having a data lineage, data quality, a robust data quality that is properly documented and monitored. Then the segmentation that I mentioned earlier. So seeing situations even for tier 1 global banks that do not necessarily have a risk segmentation, and they rely on this commercial segmentation that is not bringing additional insights when it comes to monitoring and identifying money laundering and terrorist financing risks. The threshold calibration which follows this risk-based segmentation is rather a complex exercise and has to be maintained once it's implemented at the segment level. And then you have the prioritization, which, according to our observations, leads to an increased risk coverage, and of course, it decreases the residual risk in a potential operational backlog. So imagine that you have an operational backlog of alerts that you were not able to deal with, and I guess the benefit of having a prioritization mechanism that is machine learning driven should lead to a treatment of the worthy alerts and suspicious activity reports before they become a backlog. So this way you decrease exposure in your operation backlog, and you're able to demonstrate to your supervision authority, to your state bank, that you have done the right things in terms of identifying money laundering risks. Then you have the case management and alert workflows, and of course you have the reporting, and this should not be a one-off exercise, but should be part of a framework that every financial institution, every bank should have in place. We can move to the next slide. The common concerns related to the sanction screening, I think there's probably two. How do I deal with an optimal? How do I have? How do I obtain an optimal sanction screening solution? Have based to fuzzy logic, and then the second one is how to increase my operational costs related to dealing with earth investigations. So I think you are able to find the balance between efficiency and effectiveness. These are the two main challenges that financial institutions have nowadays. So imagine that you have these black boxes that you cannot optimize at the algorithm level for fuzzy logic. It is rather important to have ways to perform sanctions testing in an iterative manner to determine what is the threshold, what is the optimal threshold in order to be able to reduce your operational costs, but not have false negatives and then be able to detect your sanctions related risks. So these are some of the challenges. Team, I think we can move to the next slide, slide number 10. There's some general global challenges that we're seeing at various institutions when it comes to sanction screening and challenges in the global name recognition. Of course, there's the localization, and you know that very well in a jurisdiction like Pakistan, what that means, the gender classification, decomposing for screening purposes. How do you set up that screening logic, the comprehension, the searching, the matching, the watch list management, the calibration, the separation, and the narrowing. These are some of the challenges that institutions face when implementing and optimizing their name. Achieve that. First, focus about the buzzwords like artificial intelligence and RPA. I think when it comes to artificial intelligence and robotic process automation, there is a temptation on financial institutions to think that just bringing these new technologies as part of their landscape will solve their broader problems, which is a rather incorrect or improper statement to make, because as I demonstrated in my previous slide, it is very important to build that foundation that will allow you to have a proper risk assessment, a proper risk-based approach, segmentation models, thresholds, data lineage, data quality, to have solved those basic problems before you bring in artificial intelligence and robotic process. There are institutions that have been through that part of that maturity life cycle and have achieved a stable solution that can allow them to test new emerging technologies like artificial intelligence. The next one is related to the fintechs, rentechs, regtechs, insurtechs, and all the techs out there. There is a phenomenon which I personally refer to as a fintech overdose. And again, some of my clients are rather tempted to test and have proof of concepts, proof of value with this fintechs, and think that, bringing in a new emerging technologies, I don't know, from Silicon Valley will mean that they have resolved all their incumbent problems related to financial crime compliance, which is absolutely incorrect. I think it's very important to solve your core technologies problems before testing new technologies, and then once you dealt with that and build that the technology blueprint and solid foundation, you can start to test new fintechs, new technologies that will help you to detect some of the emerging trends related to financial crime. So think that entity resolution network analytics, behavioral analytics, and so on and so forth, based technologies have to be properly assessed and thoroughly incorporated in a technology landscape. And then there is I think we move to slide number 13, which is related to the trends of the KYC. I think a jurisdiction that wants to test and try some of the concepts related to utilities have to pay attention to some bigger challenges, such as the legal implications, the founding parents. Who do you want to have as a founding parent of the KYC utility? The organization type, the location, should it be a jurisdictional utility? Should it be a cross-jurisdictional utility? The client life cycle, the client segment clients, the client segments that should be dealt with, and so on and so forth. So there are a lot of challenges related to setting a KYC utility, and I know that, and my colleagues have asked me to bring in that point of view. There are some good examples out there. We actually have KYC utility guarantee. We have also seen the so-called KYC utilities, which are more like information collectors rather than a proper utility that fulfills certain services for financial institutions. So I think the conversation is rather broad, and any jurisdiction that is thinking about a KYC utility should expect a 3 to 5 year worth of effort before even thinking that they will have an operational KYC utility. Tim, I think we can move to slide number 15, which is related to optimal investigations. I know that this is very difficult to read. I put a scheme there which is related to an operating model that a financial institution, a bank should have, and when looking at their investigations, I'll only refer to the sort of the respective steps and categories. It is very important to have a robust risk engine. I mentioned earlier about alert prioritization, machine learning, proper segmentation models, proper thresholds, and of course allocation mechanisms will allow a financial institution, a bank, to properly distribute the alerts according to the seniority of the reviewers, level 1, level 2, level 3, all the principles that should be in place in order to have a proper allocation. Then you have the investigation preparation. I think there's a lot of challenges when it comes to the data collection and aggregation that will enable the financial institution and the compliance teams to review some of the alerts and properly move into processing the investigation and building a rather solid case in case someone will assess that a suspicious activity report should be filled in. And of course, the quality assurance should be a rather iterative process related to these investigations in order to make sure that the proper things have been reported, but also if there's anything else that needs to be reported is properly and duly reported so that you avoid the regulatory exposure. And this is an iterative and constantly improved process. It cannot be a one-off. That should be standard operational procedures on top of the alert investigations. And again, one of the mistakes that financial institutions are doing is to think that or have a one-size-fits-all type of approach. When it comes to investigations, there are good standards, better standards, and better practices, but don't expect that just copying what another institution is doing will be the answer to your problem. So I think that's very important to outline when it comes to financial crime investigations. And of course, there's the quality of data and your ability as a financial institution to connect to some of those data sources. This is rather important because you would be expected to respond to some of the further inquiries from your regulators, and it's very important to have properly documented investigations and reliable data sources to fulfill your investigational needs. I think we can move to slide number 17. I purposely refer to it as ML in ML, which essentially translates into machine learning in anti-money laundering. There are ways to include machine learning into the broader financial crime ecosystem. So, as I mentioned earlier, I think one mistake that a financial institution or a bank can do is think that bringing in machine learning on an environment that is rather unstable will be the answer to their problems. So I think it's a wrong way to begin with. It is very important to pay attention and have a robust risk assessment and be able to identify those risk indicators that you need to have to identify with technologies such as machine learning. It is very important to have the foundation related to the systems and your data. As I mentioned earlier, also for investigations, it is rather crucial to have those data sources aggregated and accessible in order to A, be able to fulfill your investigations, and B, be able to build your machine learning models that will help you to increase your risk coverage and reduce your costs. It is very important to have detection strategies. Artificial intelligence is essentially a friend. In PwC, we have invested millions of dollars in order to build what we refer to as responsible and explainable artificial intelligence, and have worked with universities around the world. And happy to share some of these studies. But if you just put on Google on a search engine responsible artificial intelligence from PwC, you will see the amount of work that has been done in order to help financial institutions to implement machine learning and artificial intelligence models that are rather explainable and responsible. So it's very important to be able to justify to your regulator how did you reach to those conclusions and how come a particular alert has been deemed as non-suspicious. So it is very important to have all that documentation explainability. And of course, there's the investigation and reporting. So it is very important to also pay attention to areas such as investigations and reporting, and how can you bring in more machine learning technologies and models into building more robust investigations and have proper reporting and integration with your financial intelligence unit and other regulators. We can move to slide number 18. There's a few areas of unknown behavior that can be explored, such as the alternative data sources, as I've mentioned, the different algorithms than the classical ones. It is very important to measure and validate the results. So I guess when you bring in machine learning into your ecosystem, it is very important not to refer to it as, I have a model now and I'll just be able to use it without any further testing. It is very important to perform that testing. It's something that people refer to as above the line, below the line, but for machine learning model purposes, and be able to see whether your models have or yield the proper results. In a recent case, we had a machine learning model in a proof of value exercise built for one of the large tier 1 banks. That of all suspicious transaction reports that we have identified, only one was deemed by investigators as not suspicious or wrongly identified by the model, and that was also debatable. But most of them were qualified as relevant. So it is very important that your model is also help you to increase that risk coverage instead of putting an additional burden in kind of increasing the number of false positives. We can move to slide number 20 now. Related to the technology transformation. So as a recap of the financial institutions and the key areas of focus for banks, I heard and I know that the agenda included some of the onboarding related topics. So I mentioned also the KYC utility. It is very important to have a robust onboarding process, then the monitoring and surveillance, then building your the fourth line of defense, the relationship with your regulator, and of course having a risk-based approach and a risk-based and a thorough risk assessment. We can move to slide number 21, and there's only one left. So as I mentioned earlier, it is rather important to have a mature transaction monitoring system. So as you can see here, there's three areas when it comes to this maturity: the basic, the development, and the mature. And only the sort of towards the end of the developing and the mature transaction monitoring system would allow models like machine learning, artificial intelligence, and new technologies to be implemented. So it's very important to perform that assessment. We can move to slide number 22. There is a sanctions transformation journey. As I mentioned earlier, it is very important to be able to manage that black box and make it more optimal. So there's ways to achieve that, from iterative sanctions testing to ongoing review of the outcomes of the investigations. And nowadays, vendors are also trying and testing blockchain technologies to make sure that their watch list management is properly monitored and integrated within the financial institutions. We can move to slide number 23, and this is the last slide. I have some use cases here. Again, I'll be in Karachi in January, and I'm happy to have additional conversations about some of our experience. There's some global banks and EMEA banks that we work with that have achieved rather outstanding results in terms of increasing their technology coverage. So we had situations where banks were only using 40% of the technology features that they had in place. So it is very important to make sure that you have proper coverage from that perspective. We had situations where we brought in machine learning and other artificial intelligence algorithms in augmenting the existing technologies. We had situations where we work with banks to improve their investigations models and achieve thorough regulatory connections by achieving this sort of robust investigation model. And on the sanctions side, I think the panacea for current sanction screening solutions is to have them optimal and achieve that balance between efficiency, i.e., reduce operational cost and effectiveness, i.e., increase detection of sanctioned partners. I'll close the presentation here. I know it's been very accelerated. There were a lot of topics. As I mentioned, it probably requires one day each of them. But happy to take some of your questions. Otherwise, it's been much in January. And again, thank you to the organizers. Very honored to be here with you, even though the apologies for the technical inconveniences.
We are very grateful for the time and efforts you took to participate in the summit and share your valued and informative views with us. Thank you so much.
Thank you very much.
So now for an interesting panel discussion on making the first line of defense the transformation leaders. I'm truly elated to introduce our panelist, Mr. Sadur Rahman, Group Chief International Financial Institutions and Remittances, National Bank of Pakistan, Ms. Mehreen Ahmed, Group Head Retail Banking, Bank Al Falah, Mr. Nasir Salim, Head of Global Operations, HBL, Mr. Sharjeel Shahid, Group Executive Digital Banking, UBL, and Mr. Khurram Gul Agha, Head of Operations, Telenor Microfinance Bank. And to moderate the session, I would like to invite on stage Syed Faraz Anwar, Business and Risk Consulting Partner, AF Ferguson and Company. Ladies and gentlemen, please give these industry gems a wholehearted welcome.
So first of all, our apologies for this overrun of almost like 50 minutes. So I don't know how much of an implication it will have on the discussion that we're going to have. Each one of the panelists is very, is starving for it. Obviously, each one of you is also. So we'll try and keep it as brief as possible. Obviously, but good thing about this, obviously, the unfortunate part is we are between you and the lunch. But good thing about this is a stellar panel. I'm saying that stellar from the very bottom of my heart because I know each one of them. And each one of them brings niche specialization in the work that they are doing. And we've got a very balanced panel because we've got people from business, Mehreen, Saad, both of them have got deep expertise in the area that they're working in. We've got digital in the sense of business and support, and enablement also. We've got Nasir, who is, he's always said about himself is that he is first line of defense, extended first line of defense, 1B. So one is business, 1B is him. And then we've got Khurram Gul Agha. Obviously, he's seen both sides, microfinance banking. Lately, he's been a part of a microfinance bank, but before that, he was a commercial banker. So we will probably hear very interesting views about the challenge at hand. So in the interest of time, I'm going to start the questioning round. So I'll pose first question, Mehreen, to yourself. Obviously, Mehreen, you are probably one of the most senior business leaders who is dealing with a very diversified retail book. I mean, it's got SME, consumer, all of the things. And so, would you like to explain your views on this recent times? Obviously, you're seeing anti-corruption drive, you're seeing tax evasion drive, and obviously, there's been a talk about, anti-corruption and so on and so forth. So there are impacts of that with respect to the pressure on banking sector deposits. And then you've got the incremental challenge of FATF to address. So we would like to seek your views on how should the banks be dealing with this monumental challenge, and also, your views about the de-risking bit, because we have been hearing a lot about this morning. So please, Marine.
Thank you, Faraz. I think 2019 has been one of the most challenging years for us, for the banking system, and I'd be lying if I said anything else. And from plethora of inquiries to inspections, frequent inspections, to compliance, with the biometric standards, to the general economic slowdown. I think so. All those factors combined, it's been a difficult year, and but I think I can safely say that now we are better placed as a banking system. We've gone through a learning curve. We were not that prepared, I think, one must admit. How have we, gone through that journey? I think in the last 6-8 months, I do feel, if I talk about Bank Alpha and generally the banking system, there's been a greater awareness for these issues, both, at the front end level, at the back end level. There's been a lot of collaboration between, the back end functions, particularly the compliance functions, and the front end. So we were trying to evolve. I think jointly, I think we've tried to come up with a lot of solutions, resolutions. I think we've also tried to put a method to this madness. There was no other way. I mean, the front end was crumbling. Everything would land at the front end. Ultimately, it's the front line which interacts with the customers and manages the expectations, etc. So I think through a lot of data, I must say that data analytics has helped. I must say that even our own systems and the tools that we had, let's say 2-3 years ago, compared to what we have now, at least as a business head, I feel more secure. I feel more optimistic about the future. We have also gone through a culture change internally, and that has been led right from the top. There are more conversations around this subject, and there are more conversations around balancing, the franchise risk with the business numbers. And also, I think what we'll increasingly see over the next 6 months, we are putting in a culture, or I would say a mechanism where rewards will be increasingly linked to this aspect. Already a lot of work has been done in terms of capturing this in the key KPIs, etc. So that said, I think I feel that the challenges are definitely there, but I think we are grappling with them. Now, your other sort of question, definitely I think in terms of how we look at balancing the risk versus the business, there's a lot that we have done internally. So like I said, that we're now better prepared. We are also proactively doing a lot of things that we were not doing earlier on. There's been a lot of, I would say, rectification. There's been a lot of, let's say, deeper probing. I've been in very difficult meetings with the regulator, trying to explain certain transactions, trying to, wherever possible, because it's easier to, it's in this present environment, it's very easy to blacklist everyone. So, even if there is the littlest of suspicions, it just completely rocks the relationship. So from that relationship view, I think there's got to be a balancing act that has to be brought in, and the more information that we have, the better quality information that we have, and the better quality information that we present to the various stakeholders, whether it is a regulator or other agencies, or even our own internal control functions. I think chances of salvaging the relationship is not high. So I think and a lot of other stakeholders the expectation really is that and that's how we are. So our quality has not been great. Our KYC, the quality of our KYCs, periodic reviews, so many things that were all, I would say, addressed in 2019. So I think what we feel very in terms of being able to strategically and organize being very safe. I think over the last 6-8 months, there's a lot of stuff that's happening to streamline. Then there are obviously, there's a barrage of inquiries, and at times, wherever these inquiries or queries are coming from, they have a bird's eye view of what's happening. We don't. We're not investigators. We have a very banking type of a view on a relationship and transactions. So we're not probably geared up for that kind of thing. So I think one of the things that we have been discussing with a lot of stakeholders is that give us more information, give us more quality information at the start, so that we can deal with everything in a more organized way. I can safely say that the onboarding that we're doing, at least for the last 1.5 years, the quality of that onboarding, because of all these checks and balances, is far superior than what was happening 10-15 years ago. And if more information is made available, then your efforts will be more focused, and you will not chase away the good customers or the good relationships. So that's important. Secondly, I think the other big challenge is which we have to address. Once a name comes in an inquiry somewhere, even remotely, then it just stays there. So there's got to be a mechanism to somehow, over a decent or reasonable period of time, get conclusion on these things, because these things linger on and they remain in the system and just causes more issues for us. And finally, I think the awareness of the customers is very important. There is some responsibility lies with us, but generally I think forums like this and other public awareness programs in terms of what the requirements are, what the country is faced with, I think that'll help our cause a lot.
Thank you so much, Marine. Very elaborate response to the question. So after that, obviously, Saad, you probably could talk about almost every customer segment, but I'm going to talk about more on the emerging trends with respect to trade-based money laundering and terrorist financing. So in different customer segments that you have dealt with so far, you talk about trade, you dealt with trade, you dealt with FI, you dealt with correspondent banks, large corporates and many others. So if you could share your views about that, and second is what kind of initiatives you as an institution have been undertaking in this front.
Yeah, I think, thank you very much for that. I also appreciate that, this panel stands between lunch and the audience, so I try to be a little brief because I think it's a little unfair now. The reality is that, if you look at it globally, so 2008, 2009, I think we've seen, the world has seen a sea change of regulations and all, obviously led by the US, followed by Europe, then Asia and other parts. To my earlier, to the point of one of the earliest speakers or presenters, National Bank is also present in 19 countries now. But the funny part is that the regulatory demands from one of the least developed countries is exactly the same as what a US or an EU regulator wants. So this standardization that we are witnessing across the globe is not only there in the rest of the world, but closer to home in terms of State Bank of Pakistan. In the past 5 to 7 years, whatever they've come out with is fairly similar. So you're looking at a fairly standard product or in terms of a requirement set that is there now, right? So it begs the question that should you really be in all of these locations? Do you have the right model? Do you have the right people? Do you have the right technology? Do you have the right skill set? Do you have the right understanding at the board level to continually invest in people and process? And it's an ongoing process. The funny part is, in our geography, it's not just these regulatory standards. So for instance, we are present in 2 locations in Europe. It's the base regulatory standard that's required, and then there's a set of European standards that the financial institutions must also comply with. So you've got territorial requirements, you've got host requirements, you've got parent country requirements. So it's just, it's getting to be a maze. Yes, I think, if you look at Pakistan in particular, in the past 5, 6, 7 years, I think we've all done taken the right steps. Be it on AML, be it on terrorist financing, be it on cyber now more recently, be it on electronic theft, be it information security. I think most people now, thanks to our regulator, the regulators either forced us or some of us, because of other actions, have actually started to embrace it ourselves. Let's be honest, right? But I think so the more people that I talk to in terms of client sets, in terms of fellow bankers, in terms of old colleagues and all, people get it now. It's just a case of now varying degrees, right? In terms of someone is really ahead of the curve for their own reasons, someone is a little behind, but I think generally you can't find any institution in Pakistan that does not understand this, does not appreciate what needs to be done. Even if you look at the recent set of, if you look at trade and money laundering and all that, look at the guidelines that have come out from State Bank of Pakistan, right? It covers everything under the sun. How soon will we be able to, as institutions adopt all of those things? It's a question of time, but trackers are built in different banks, people are monitoring at the board and at different committee levels. So yeah, there's significant work that's happened. I think the thing that underscores everything is this continuous investment in people and technology, and it's easier to say it and it's very difficult to do. You have to look at your own talent pool, you have to look at, upscaling that skill set, you have to look at ongoing training, as Marine said, this is a continuous process, it doesn't go away. And I think, frankly speaking, the kind of things that I've recently come across in terms of regulatory demands and all, I don't see this, going away anywhere, right? Secondly, I think on the correspondent bank front, I think why are the correspondent banks becoming tighter or asking us for more stuff, etc., whatever? It's a function of their own regulatory concerns, right? So it's their own country regulator that is asking them to raise the bar, and this bar is literally reaching the sky now. So in turn, I think it's great because all of that best practice then gets transferred to Pakistan or whichever country that you're looking to work in. I think my key message on the correspondent bank front is please stay close to your correspondents. You should have a relationship that's built on complete trust. Share with them what your problems are. They will, instead of them finding out from somewhere, it's better for you to initiate and say, you know what, I have a problem over here, but this is a fix. It's going to take between 3 to 6 months for me to fix this, but I'm on this, So I think that transparency is extremely important. And so, like I said, this past decade, right? So we went on to compliance, we went on to AML, we moved on to cyber. More recently, some of my friends from here also were with me at a conference last month. Now the correspondent is saying, we're going to come and ask you, what impact your bank has on the climate, because that's our new concern now. Yeah. So it's how are you impacting the environment around you? What are you doing? As it's way beyond CSR. It has an impact on your financing or whatever actions you take. So to sum up, I think there's a plethora of regulation. What I would want all of my colleagues, and that's what I tell myself every day, is let me not just get lost in this regulation and lose sight of the client, because I think the client is buried somewhere underneath and we've kind of forgotten about him. So like Marine said, I think the key takeaway is that all of this is great, but remember and respect who pays your bills at the end of the day.
Yeah, that's absolutely. It's a fair point. I think that's a very fair point. And to share with you two of the incidents, that I've just experienced, to top up what Marine has just mentioned, is that I was comparing October to October 2019. This is from the State Bank of Pakistan report, Irfan Saab. October to October 2018-19 comparison. A total of 363 billion rupees has been sucked out of the banking deposits and has been included in cash in circulation, which essentially is a very large figure, and that has led to a cash in circulation ratio of 24% in the case of Pakistan as opposed to neighboring countries of 11, 10, 8, 14, and so on and so forth. So Marine, your point is very valid, in terms of this situation, how do you address that challenge when the financial inclusion is only 21%? So my next question to Khurram, to you is obviously, now we're going to talk about microfinance banking industry. And the first perception that comes in the mind is, there is a heightened risk of asset-based money laundering. There is a heightened risk of trade-based, terrorist financing, risk of terrorist financing. So what's your view about this perception? And also, what kind of recommendations would you like to give around people, process, technology in the case of microfinance banking industry? What is your view of the industry state of readiness?
Okay. First of all, coming from commercial banking and into microfinance banking, there's a marked difference in the model of how things operate. Microfinance banking was more towards the community. The relationship person is also the person who's collecting the loan, is also underwriting. So because of that, in the last 1.5 years that we've been here, we have had to relook at how our models are operating. Because the more you get into digitization and the more data that is gathered, how do you bring that into finding out the purpose of the loan? Because at the end of the day, that's in microfinance, that's very key. That why is that lending going out? Because we've got to recognize there's still about 40 odd million customers out there who probably have not had this financial education before. So it's a little more difficult. It's challenging. Because of that, the investment in technology has to be extremely heavy. But again, behind that technology, you need the right people to run it as well, understand the process. Your governance needs to be strengthened a lot more. So as an example, Marine was absolutely right. Forensics is something that as bankers, data forensics or forensics around financial crime, or understanding that's a skill set that needs to be developed out in the country. Second, data availability and utilizing that data on a collaboration basis is also required, because most of these customers will graduate out to be commercial customers, or they will graduate out to be on a slightly higher bracket and a bandwidth. One of the things the earlier presenter said was, if I get into the branchless banking side of things, once you start putting your transaction monitoring over there and KYC AML conditions around it, you get hit with a huge amount of false positives. But somebody needs to sit down and process through all of them. So all of this is adding a lot into the time that you take to service a customer, figure out the problem, move ahead. It can't be done manually. So a lot, coming back to your question on technology, process, and people, we radically need to look at how to do things differently. And that's the stage that we're going through right now.
So do you agree that the that the terrorist financing risk is higher in the case of microfinance banking, because there may be a risk of not being able to identify the ultimate use of funds by the customers? Because of the large number of customers?
See, it's very difficult to narrow it down because these are all things that you hear. But at the same time, is it easier to do it over here? The answer is no, because regulations, irrespective, do apply across the board. So it's not just that one bank is not regulated in a particular way and another bank is regulated in a different way.
Fair enough. Nasir, over to you. I mean, we have been talking a lot during the summit, so a lot of ideas I got from Nasir in terms of which areas he has been working on, and obviously which area then we feel the industry should be working upon. So Nasir, obviously continuing the discussion with respect to optimizing the role of 1B to support 1A, and not, by the way, just support 1A, but also the second line of defense, which is compliance. So your views more specifically around trade-based money laundering, terrorism, financing risk, and how could the operations role be optimized further? It could be made, more holistic. It could be transformed more holistically. So, please.
Thank you, Faraz. So, a couple of things. I think before I get into the answers, and even though we're sitting between the audience and lunch, so that's a dangerous position to be. But looking at the conversations that were happening today and looking at my career when I started banking, there is a huge sea change, as we all know. So initially it was, bankers trade in documents, not in goods. Compliance is compliance department's role, and they are the ones who should do it. So I think we've evolved dramatically since then in terms of the requirements, in terms of the regulations. And also, as Saad and Marine were talking, the awareness at the front end around what is required. KYC, Arif in the morning brought it up, that is the critical and the cornerstone. Coming specifically to the 3 lines of defense, as we call it, the time is ripe, and when you look at some of the best-in-class operations globally, operations is 1B. It is not that, business brings in a transaction and that has to get processed regardless of, what the scenario is. If you look at some of the growing models, the older models, it was the KYC is the front office's job, so it's very clear. The TMS will come from compliance, whoever is pulling it, and there is a lag, and then if there is something, there is an STR. The world is moving much more forward. This is about, we will make a mistake, and we will take a couple of months, and then we'll go to FMU, in Pakistan's case, within SAR report. And that's no longer acceptable. The world has moved to be much faster. So how do you make operations an effective 1B, I think is what is the key crux of the question that you're posing. And for that, I think the first thing is data. So it is about bringing the visibility of the KYC to the operations team, so whether it is the international payments, whether it is the trade transactions, but being able, so that means that if you've got KYCs on a customer in paper form or in a credit file, that's meaningless. That has to be electronic, there has to be a eKYC repository that operations at the time of the transaction can review. The second is the customer history that has to be easily available for that specific product or transaction type. That provides the ability for operations to really do an effective job and make sure that the right requirements are being fulfilled. Secondly, we need to have visibility as to the prior conduct of the customer. Have there been additional alerts? So bringing all of that together allows for operations to perform the role effectively as 1B. The second piece over here is the culture change. So operations has been used to pushing out transactions. So it is also creating that awareness, it is creating that training and giving them the right tools. So as we put those elements in place, and if you look at, for example, now TBML, the regulations that the central bank has put together actually are going to mandate that we do all of that analysis. Yeah. Additionally, big data, so looking at the comparison with peer group, looking at the transaction flows. So the more information that is brought in a very succinct, coherent manner as key indicators, allows operations to either stop a transaction, move it forward. The second big piece is how we obtain the information. So really, know your customer has multiple facets. One is obviously regulatory compliance, which is a focus. But when we talk to our customers, it's also about understanding their needs and the opportunities. So really, from our perspective, we see that as an opportunity to deepen the relationship, find new avenues where the bank can partner with the customers for mutual benefit in a compliant manner. So it doesn't necessarily have to be taken as a burden. The last piece that I would recommend is that, one of the things that we in operations have started doing for trade is holding trade seminars for our customers. So day before yesterday, we did one in Islamabad. We were very thankful for having State Bank represent and talk about, the national assessment that has gone. And then explaining to the customers that the more information they can give us upfront about counterparties, around their specific concerns, the more smoother these transactions will go. Where we're looking at developing portals, we're looking at developing some artificial intelligence so that the entire trade documents get digitized. Once you get that digitized, as we all know, not all the information in the trade documents actually go in the SWIFT message.
Absolutely.
Once you digitize it, then you can actually run sanction screening, you can do a lot more, and you can also do the integrity checks between that. So I think that's the future, is really more and more, as Khurram is saying, technology driven, big data driven, and operations definitely can be a driver, so that overall we keep pace with the changes that have taken place on the front end, on compliance, and the regulator element, and we take the overall financial sector forward.
So I think during the course of the discussion, you also mentioned about operations globally taking on the responsibility for, if not closing it, at least taking the major role on the closure of the alerts, which are not getting converted to the RFI stage, which is level 1. So I think that is something that also obviously you have in your mind. So a few more things could also be done by the operations, or by the bank as a whole. So thanks a lot, Nasser. So I probably would pose the last question to Sharjeel, and then 5 minutes Q&A, 2-3 minutes Q&A. Obviously we know that we want to feel that you are alive, because the feeling that we are getting from here, obviously, and this is rightly so, is that because all of you are probably exhausted and want to have water, juice, or something, some energy drinks. So our apologies, but this is how it has turned out. So Sharjeel, to you. And this is my favorite one, which is branchless, because I know branchless is doing such a massive job with respect to financial inclusion. So it's one of the major concerns of the country as a whole. So while we talk a lot about that, we've got fact of consideration, and we've gotten a perception that there is a heightened risk of terrorist financing risk associated with branchless model. Also, as I talked about the microfinance banking industry. So I would like to ask you to share your views, because this is exactly what we talked about the last time also, and also what improvements you would think could be brought into this niche model, which would help the institutions managing this financial crime risk.
For us, branchless banking regulations, मेरे ख्याल से it was a turning point in Pakistan's financial history, and credit goes to State Bank, क्योंकि 50 सालों में जो banks 20-22 million, 25 million customers जो है वो on board कर सके, वहाँ पे in the last 10 years, I think we've been able to collectively on board almost the same number, if not higher, in the branchless banking framework. But considering the challenges that we are facing as a country right now, if we were not living in a digital era, then we would be thinking of scaling it down. Because yes, the risks are significant in that space. And luckily, because of this digital transformation and the technology era, we have tools and ways to address those concerns. और जहाँ पे हम अगर de-risking की सुबह से बात हो रही है, हमारे पास सब advantage ये है कि देखें branchless banking में concerns हैं क्या predominantly? There are two major concerns. एक है knowing exactly who you are dealing with. Are you comprehensively aware of who the customer is? And secondly, involvement of cash. Predominantly, it's cash-based transactions. Technology, दोनों के solution आज provide कर रही है, and we need to learn from the rest of the world. I'm a strong believer of learning from what's happening across the world. Our problems are not unique. Our challenges are not unique. There are countries, there are economies who have dealt with these kind of challenges before successfully. There are tools available. अब digital KYC की हम सुबह बात कर रहे थे, e-KYC की. This has been successfully deployed all across the world. There are plans underway जो spearhead किए जा रहे हैं. Centralized KYC की हमने बात की. That's one way of catering for this. And secondly, cash. It's amazing how State Bank is spearheading all these initiatives of going for 1 million digital acceptance points, and merchant onboarding guidelines have been rolled out. Now we are talking about micropayment gateway being rolled out next year. So a lot of work is already happening. We're in the right direction. But then it all comes down to having the right skill set in place, investment in technology, and for that we need to look at those global use cases, successful use cases, how it has been done elsewhere, and because we can't afford as an economy to reinvent the wheel, and there's no need to do that.
Sure. Thank you very much, Rajil. Very nicely put. So, one question or two questions I can take from the audience, and then obviously we will wrap up. And obviously we can commit to you that we are going to be very brief in our response to your question. So, if there's any volunteer, any brave volunteer who could ask any question, or is that we should call it a day, or at least half a day? No? Okay. So at least I can dedicate my award or whatever I'm going to get from Delsons to yourselves. Sorry. Oh, thank you. I should correct this. Which action I
Hello. I'll try to be very brief. My question to the business heads, some of whom are my colleagues as well. It is a previous experience that compliance was always undermined by the business. And instead of cooperating and coordinating with compliance and doing business with compliance only, it was the first resistance line for us. Whether it was reporting of STR, whether it was onboarding new customers, whether it was trade financing and remittances, we really had time. Hopefully now things are improving and things have improved, and we have learned the lesson after being put on the grey list and appropriate steps to ensure that these things are not repeated. And business targets and all, these are not our prime objectives. Our objective is to do business with regulatory compliance and all. Thank you.
If I can take a crack at that. Yeah, so I think Riyaz Saab has raised a extremely valid point, but I think, like I said, it's a slow graduation, right? So yes, maybe 4, 5 years, 5, 6 years back, that was the case, but the compliance person used to walk in with something, business guys say, you know what, I don't want to hear it. This is my client, this is how we're going to do it. I'm not going to ask him more questions because he'll get upset, etc., etc. I have targets to meet, all you guys do is eat up, whatever, my revenue, etc., etc. But I think a lot has changed, and particularly in Pakistan, national bank's experience, right? So given our size, scale, whatever, if there are, if compliance holds its weight over there, if it's a no, it's a no, right? So I think, yeah, a lot has changed, but clearly more work needs to be done. And it's true, at the end of the day, it's not just Pakistan. If you look at it globally, people have learned the hard way. I think there's only one way to learn a good lesson, and it's unfortunate. Some of us have learned the very hard way.
So Saad has spoken his heart out during the second question, not the first one. I'm going to dedicate my award to all the audience, the patient audience who has patiently listened to us. So thank you so much for your time. So we'll break for lunch now.